everyone, a very good evening to everyone. I hope you all are fine and doing well. So, as you know that this is the demo class where we are learning the things that how to qualify with this course. So, first of all, let me introduce myself. My name is Aishwarya Sharma. As you can see the qualifications in the screen, and I have experience for more than 5 years experience in teaching, and I just learned teaching from the age of 19-20. From that age, I am uh, giving mentorship to different types of courses. So that is small intro about me. Now, the most complex subject of CAIIB examination, that is BFM. Everyone is saying that BFM is one of the toughest exam, one of the complex exam, and it is very difficult to clear this exam. I understand this thing. I am saying that thing that yes, BFM is one of the complex exam, one of the toughest exam, but with the right strategy, this exam is nothing. Right strategy means we are discussing these things in this video. So be there, just see and then decide. Bank financial management. You are already a banker. You are already managing the things related to the banks. And in this bank financial management, we are learning the things related to different things. What banks are doing in actual, in their operations, in their daily operations. Which type of things they are facing. What types of facilities they are providing. Everything we are going to learn in this module, bank financial management. So first of all, just swap this point from your mind. Just swap away from your mind this point that this subject is hard. Think that this subject is interesting because where you are working, and this subject will tell you about everything, like how banks are dealing with the things. So first of all, this thing that this subject is very interesting, right? Now, in the bank financial management, as we know that this is the subject covered in the CAIIB examination conducted by the IIBF, and where we process the things, where we monitor the things, control the things, report the things, is the financial management. Everything related to the management, the things financially. Then bank is that institution who is serving the customers, provides services to the customers in different departments and earning money by lending, obviously. So bank financial management, in this subject we are learning lots of things related to the international banking, related to the risk management, related to the treasury management and balance sheet management. Now 4 modules are there, right? 4 modules are there and every module is important. Every module is unique and contains lots of information. If someone is asking me like which module is having more priority and lots of questions from there, as of now IIBF is playing games like everything is important in the eyes of IIBF, but still IIBF loves A and Me module more than C and D module. IIBF favorite modules are A and B module. That's why lots of questions are there from A and B module. And 25 to 30% numericals are there. So numericals plays very important role in the context of examination, right? So we can't skip numericals also. Numericals are easy. Don't worry about the numericals are very hard. Just some formulas and some tips and tricks. You are able to learn the formulas and able to solve the numericals also, as the calculator is allowed already in the examination. But the thing is, right strategy. So focus on module A on priority, because as this module is telling about the international banking, that is exchange rates and forex business. In this chapter you are learning about different types of forex exchange rates, how to convert the currency of India in US dollar, in euros, in Germany. Like if I want to see the amount of dollar instead in comparison of Indian rupees, so I use the Google. But this chapter tells us what is the method used in the foreign exchange transactions to determine the correct rates. And also this chapter telling about the importance of RBI, FEDAI, authorized dealers. As you know that RBI is our central bank, is the boss of all the banks. FEDI is a self-regulatory organization established in 1958 that helps the banks to by advising them in foreign exchange transactions. And authorized dealers are the licensed dealers who get the license from the RBI, so they can handle foreign exchange transactions. They can deal in the foreign exchange transactions. So foreign exchange definitions and markets, like what is the time of foreign exchange market are open, what are the characteristics, who are the major participants, how what happened actually in the foreign exchange market, and how this market is basically managed at that international level. Everything you are going to learn in this chapter. Then next is LRS. If in India someone wants to send money to the Germany, suppose my family relative, family is living in the Germany, so how can I remit money? What is the limit? What are the permissible activities? What are the non-permissible activities? What is tax collected at source? What are the rules for the inward remittance and outward remittance? If someone wants to send money to me, that what happened? What are the rules and regulations? So everything in this chapter we are going to learn. This liberalized remittance scheme, as I told you, that the limit is US dollar 2,50,000, but in some conditions this limit can be exceeded. What conditions? Suppose if X son is going to the abroad and take admission in the university. That university needs some more money as a tuition fee. So now Mr. X have to show the evidence to the banks that yes, that bank is demanding the things, demanding the excess fees. That is called the basically then Mr. X will show the evidence, and then RBI allows that okay, you are allowed to exceed the amount. Then correspondent banking and NRI accounts. What is correspondent banking? Suppose there is a bank in India, Chunmun Bank, right? Now Chunmun Bank having some customers in Germany. But how Chunmun Bank will serve the customers of Germany, as there is no branch in the Germany of Chunmun Bank? Then Chunmun Bank make contact with the Bank of Germany and demands the help that serve my customers in the Germany. That thing, that relationship is called correspondent banking, because for every bank it is very difficult to open the branch in every country or every state. So that's why the concept of correspondent banking is there. And some of the NRI accounts, like how NRI manages the accounts, because it is very useful for our India, because they manage their foreign currency in the NRI accounts. So what are the facilities are available for the NRIs? What are the electronic methods like SWIFT, CHIPS, CHAPS, RTGS, right? What is SWIFT, CHIPS, CHAP, RTGS? These are the payment and settlement systems. SWIFT, CHIPS, CHAPS, RTGS, and NRI banking. SWIFT is what? Is one of the most trustable type of way where messages are transmitted, and over 11,000 banks are connected with the SWIFT, whereas CHAPS are UK and US based system, payment system, and RTGS is the system of India. Then what is housing loan to the non-resident Indians? This chapter is basically theoretical chapter, contains some case study, but very interesting chapter. Then documentary letter of credit. See, what is this LC? See, suppose there is a person who is in India and there is a person who is in Germany, Y, right? Now, X got a order from the Germany that I want this order, please send my order. But X is not trusting Y. Why? Because X is in trouble. What happen if the payment is not received? And Y is saying, what happen if I give the payment and goods are not received? So that is the trust issue exists between them. So banks make a entry like a hero and saying that don't worry, you just do your business. I am taking the guarantee with the form of LC, in the form of LC, letters of credit, where transactions are successful, will be successful. X will get payment and Y will get the goods. So LC is an agreement that happens between the buyer's bank and the seller's bank. Very important chapters, lots of case studies are there, even lots of numericals are not there, case studies are there, concepts are there. Incoterms, very important, UCPDC, and some types of rules and ISBP rules. These rules are there. Then what are the facilities are available for the exporters and the importers? Now these exporters as well as importers, how they do their business without any problem, how they will get supported by the FEDI, RBI. So there are different types of policies are available to them. Different types of concepts are available to them, so they can do their business without any problem. In this, there is a portal for the EDPMS for the exporters, basically, where they can record all the things, so RBI can monitor them. IDPMS is just for the importers, where they can record all their transactions. So there is the thing, facilities which are available for the exporters and importers, so they can do their business without any issue. Then ECB, external commercial borrowings, and the foreign investments in the India. Very important chapter. ECB is like a loan which is there for the exporters and importers. A very good chapter. Then risk in foreign trade. Now in this chapter you will get the overview of different types of risk, because every risk you are going to learn in deep in the module B. There is a separate chapter for every risk. Then what is the role of Exim Bank? What is the role of Reserve Bank of India? Exchange control in India, especially this Exim Bank. What is the role of this particular bank? What are the facilities of this particular bank? Then RBI, FEMA, FEDI, ADR, GDR, these both are the siblings. Why they are important in the international banking? How they are supporting the international banking? Then IFSC, Gift City. Gift City is in Gandhinagar, Gujarat. Established in December 2019, is just helping the banks, and there are some facilities for the FPIs there. There is a role of IFSCA. Important chapter, very short chapter, very easy chapter. Then technology in the international banking. Technology in the international banking like fintech, most popular among banks. As we know that digitalization is increases if we compare to the previous years. Now everyone is using UPI, everyone is using Paytm. So banks have to make themselves according to the demand of the customers. What is the difference between manual process and the new process, that is blockchain technology? So everything you are going to learn in this chapter, very interesting chapter, very short chapter, history of fintech is there. Then next important module, that is risk management. Risk management is basically after module A, the next important module is risk management. In this, you are going to learn about the linkages between risk, capital, and return. Short chapter where you will get the just a overview of the risk. Then risk in banking business, where banking book, trading book, how to identify the risk, what are the banking risk definition, what is off balance sheet exposures. Third chapter is most important chapter, because this is the chapter which includes lots of concepts plus lots of numericals are there. Most longest chapter of module B and most important chapter of module B. How? In this chapter you are going to learn about every Basel, Basel 1, Basel 2, Basel 3. Currently we are following Basel 3. Then about the pillars, 3 pillars are there, in which pillar 1 is saying minimum capital requirement, pillar 2 is saying supervisory review, and third is saying market disclosures. You will get to know about these pillars in the upcoming class. Then market risk. What is market risk? When the loss occurs due to the changes in the market factors, right? Due to the market factors, change in market factors, loss happens That condition is called market risk. In this chapter, you are going to learn what is market risk in banks, what are the different types of framework, how to mitigate this risk. Then credit risk, when the bank is paying the borrower, is lending the borrower, but borrower is unable to pay back the EMI amount, the interest amount, the principal amount. That loss is called credit risk. Now, how to mitigate this risk? What are the framework are there in this risk? Everything you are going to learn in this chapter. Then operational risk. Operational risk is one of the dangerous risk because this risk occurs due to people, process, and some types of external events. People error like theft or some type of uh, human errors in recording, fraud, and process means where the technology is not working or power issue is there. And external events like which are not in the control of banks, like COVID-19 situation. These all are called operational risk. So the different things, how to manage this risk, how to uh, like monitor this risk, how to control this risk, what are the frameworks are there, how to mitigate this risk, everything you are going to learn in this chapter, right? Next chapter is liquidity risk management. What is liquidity risk management? Where there is a shortage of cash, not having enough cash to fulfill the requirements of a bank. That is called liquidity risk, right? Then LCR and NSFR, most important. In every cycle you will get the questions from this. LCR and NSFR, most important ratios which are there just to managing the things in the bank. Next module is, now modules are easy. C module is very easy. Treasury management, right? Treasury management means where different things are there to manage the roles of treasury, process of globalization, the concept of treasury, the functions of integrated treasury, the evolving role of treasury as a profit center. Some products are there like money market product, domestic and global market, what are the products of foreign currency exchange markets. Then Indian depository receipt, external commercial borrowing. Already you get the overview in the previous chapters about this. This module is easy, contains some numericals, and short module, very short module. Here LAF about CRR and SLR, reserve assets you are going to learn in this. Then value at risk is that internal model which is used to estimate the extreme loss condition. Extreme loss condition. Then use of derivatives, risk management you are going to learn in this. Derivative products like forward, option, future, swap you are going to learn in this chapter. Very important. Swaps, future, different meaning of these terms. Then how to manage the asset liabilities. What is the role of treasury in the ALM? What is the policies? What is credit risk? Everything you are going to learn in this chapter. Very important, very easy chapter. Then module T. In this first chapter is components of a bank balance sheet. asset liability management, ALM, purpose and objectives of the ALM. You are going to learn in this, right? Then, uh, why this ALM important? Why this module B is just for this managing the things about related to the assets and liabilities. You're going to learn in this module, easy module, not a typical module. Then capital adequacy, already about these pillars you will get the overview in our module B chapter 13. So same this thing. Asset qualifications, classification and provisioning norms, as you know that 70% is RBI advising banks to set keep aside, because if bank faces loss, then this money is there for supporting the banks. And liquidity management, then interest rate risk management. What happens if the changes are there in the interest rate risk? RAROC and profit planning. Important is RAROC. So this is the syllabus basically. This is the syllabus overview here, which I give you, which is important for examinations, like which modules are important. As I told you, module A and B are more important, but we can't skip module C and D. Now, what is the strategy basically? First one, master the syllabus. You should know what is there in your syllabus. And first, focus on your weaknesses and try to make them good. Whether numericals are the weakness, case studies are the weakness, or the concepts are the weakness. Give focus on this, right? Prioritize your module. Like module A, if you are okay with the module A, complete it first. If you are okay with module B, complete it first. If you are okay with module C and D, complete it first. Then practice with PYQs. Go and watch some analysis of previous examination. So you will know that how is the level of the examination. Then mock test. Give as much as mock test you can give, because it helps you and boost your confidence. Attend the numericals classes, attend the MCQ classes, that will help you obviously. And I know that it is very difficult to manage the personal life and professional life. So make the timetable. I know there is a 2-3 months stock is there. Already you cleared CAIIB examination. So just don't worry. This examination you will definitely conquer with the great strategy. So just make yourself, like give yourself time and manage your professional and personal life accordingly. Create a manageable timetable, because if you can dream it, obviously you can achieve it. So module A and B are important. C and D are not that much important, but questions are from there. We can't skip both these modules, right? Then uh, one of the most important thing is self-study. Nothing is there without self-study. Most important thing is self-study. Just go concept wise, prepare numericals and do the case studies. That's enough. And for numericals and case studies, you can join 7 p.m. classes every day on YT, where we are discussing every numerical from basic to advanced level. Right? So that is the thing in the BFM, which is our most important examination. Right strategy is needed in this examination. So keep yourself motivated, believe in yourself, and with this strategy, you will obviously clear your examination. So I hope that you will understand what is the actual BFM is. So I hope everything is clear. So let's meet in our class. Till then, take care and have a good day. And if you have any doubt, kindly ask in the comment section. Thank you. Let's meet again in our classes. Thank you.